Assalamualaikum and salam sejahtera to everyone. Firstly, let me introduce myself. My name is Shaira binti Rashid from L1. First of all, thanks to my lecturer, Prof. Naresh, and also my friends. Today, I will present the strategic management of Kroger Company. Before that, I will show you the view of Kroger Company.
This holiday, it's easy to give everyone fresh gifts with Kroger's delivery and free pickup. Kroger wishes everyone the freshest holiday season.
Kroger Company is a retail industry. Kroger is one of the largest retailers in the United States. The founder of Kroger is Bernard Kroger. Business activities include any activities performed by the business for the primary purpose of generating profit. There are three types of the business activities. The first is operation, and the second is investment, and the third is financing. Operation activities are the business function directly related to the supply of goods and services to the market. Kroger was operate 2,752 grocery retail store, 170 fine jewelry store. Kroger also operate 35 food production of manufacturing facilities producing high quality private label products. Operate 1,572 supermarket fuel centers. Kroger also have 2,258 pharmacy that located in combination food and drug store, provide high quality services. Investment activity is one of the main categories of net cash activity that business report on the cash flow statement. The investment activities reported by the business provide an overview of the total investment, profit and loss it incurred in the specified periods. There are adjusted net earnings per dilute share in second quarter's 2020. Second quarter's net earnings were 819 million. Kroger is growing market share and results continue to show that the Kroger is a trusted brand. Kroger more certain than ever that strategy, choice, and investment restored Kroger to execute against competitive mood like fresh, brand, personalization, and seamless. Financing activities include transactions involving debts, equities, and dividends. Kroger other financing activities for the fiscal year ending January 2016 to 2020 are average negative 59.4 million. Kroger operate on average other financing activity is negative 57 million from fiscal year ending January 2016 to 2020. A mission statement is the company's business, its objective, and its approach to reach those objectives. The mission statement has increasingly become popular business tool among companies in explaining their respective business mission and purpose clearly. In the case of Kroger, the mission statement identifies the key areas that company wants it present to be most felt. To achieve his missions, Kroger has 6 values that guide his employees on how they do what they do every day. The first is honestly, and the second is integrity, the third is respecting, the fourth is diversity, and the fifth is security, and the last is inclusions. Kroger mission statement is to end hunger in the communities that can home and eliminate waste across the company by 2025. A vision statement is the desired future position of the company. Kroger vision statement has been adaptive of the changes in business trend over the year. The statement has maintained one crucial element of it identifies the leadership that company has in the industry. Kroger vision statement is to be leader in the distribute and merchandising of food, pharmacy, health and personal care items, seasonal merchandise and related product and services. What inference can draw about the strategy of Kroger in reference to their vision and mission statement? Based on the framing of this vision statement, the strategies of Kroger are to be a leader in distribution and merchandising. The first is to be a leader. Kroger position in the global space about the company's influence in the retail industry. Kroger continue to demonstrate this leadership role through well-structured operating system and payment mechanism, along with leading in the range of service provided, the attractiveness of the service and the equality available to each. The second is distribution and merchandising. Kroger satisfied this need in its vision statement through the variety of items it has for its customer to choose from. In fact, its diversity explains its status as one of the top general retailers in the US. Based on the framing of this mission statement, the strategies of Kroger are improvement on communities and growing retailing sector. The first is improvement of communities through many direct activities that improve the situation of people in this field of operation. Kroger has proven himself as a company that considers its corporate responsibilities. Kroger has repeatedly shows that his success comes from the bonds he has with his customers. The second is growing retailing sector. Given that retail is the main business that has kept Kroger afloat for over a century, his commitment to seeing the sector grow is undeniable. The company is recognized as a pioneer of ethical principles and practice related to your well-being, represented by other strategies, as well as the standard pricing system that offers the best price for customer. Move to external analysis. Environmental analysis is an objective assessment of the changing world in which an enterprise operates in order to have an early warning system for identifying potential threats and opportunities. External analysis means examining the industry environment of a company, including factors such as competitive structure, competitive position, dynamics, and history. What is financial ratio analysis? Financial ratio analysis is one of the quantitative tools used by business managers to gather valuable insight on profitability, solvency, efficiency, liquidity, coverage, and market value of business companies. Financial ratios are a useful tools that help business managers and investors analyze and compare financial relationship between account on company's financial statement. Financial ratio analysis use data collected from ratio calculations to make decisions about company profitability, solvency, and liquidity. The first is income statement. An income statement is one of the three important financial statements used for reporting a company's financial performance over a specific accounting period, also known as the profit and loss statement, primarily focus on the company's revenue and expenses during a particular period. Here is the income statement of Kroger for fiscal year 2018, 2019, and 2020. From viewing Kroger income statement, net income shows an increase from 2018 to 2019 and starting to decline in 2020. Revenue for the company decreased in 2019 and increased again in 2020, but the cost of revenue and operating expenses decreased and increased in line with it. On the other hand, interest expenses and tax provision increased in 2019 and decreased again in 2020. Meanwhile, total expenses show an increase from 2018 to 2019 and increase again in 2020. A balance sheet is a financial statement that reports on the assets, liabilities, and equity of a shareholder of a company at a given point in time and provide a basis for calculating the rate of return and evaluating its capital structure. Next, I will show you the balance sheet of Kroger for fiscal year 2018, 2019, and 2020. Kroger's total asset increased by more than 900 million from 2018 to 2019 and by more than 2,000 million from 2019 to 2020. The company's current assets show a decrease of more than 300 million from 2018 to 2019 and increase again by more than 80 million in 2020. For total liabilities, net minority interest show a decrease of more than 34 million from 2018 to 2019 and experience an increase of more than 9,000 million in 2020. Increase in 2020 with amount payable, current liability, and long-term debt that contribute to this increase. The last was Kroger equity, which rose more than 900 million from 2018 to 2019 due to rising return earning, the purchase of larger treasury stock, and the purchase of smaller capitals. Kroger equity continued to grow in 2020 with an increase of 716 million. Ratio analysis compare line item data from a company financial statement to reveal insight regarding profitability, liquidity, operational efficiency, and solvency. Ratio analysis can mark how a company is performing over time while comparing a company to another within the same industry or sector. Kroger seemed to be in a good position in paying its current and short-term liabilities from the growth in its current and quick ratio between 2018 and 2019. The company also had a decrease in its debt-to-equity ratio between 2018 and 2019 to prove its ability to meet its obligation since it is using less debt and credit to finance its asset and growth. However, debt-to-equity ratio has increased at 2020. Not only that, the drop in Kroger's asset and receivable turnover, inventory between 2019 and 2020 is becoming excess that the company is taking longer in collecting its credit. Gross profit margin has decline from 2018 and 2019, then increase on 2020. Operating profit margin has increased from 2018 and to 2019, then decreased quite a bit. In financial ratio can be used to ascertain the strength and weakness of a firm as well as its current financial position and historical performance. Following are the financial ratio of Kroger Company and the competitor like Tesco and Walmart that calculated based on its income statement and balance sheet. In 2018, Kroger Company recorded a high current ratio than Tesco and Walmart at 0.78. This shows that Kroger has financial strength, where Kroger has a good ability to pay off its obligation or debts compared to Tesco and Walmart. And the weakness in 2019 and 2020, the current ratio is lower than Walmart, where in 2019 and 2020, Kroger recorded a current ratio of 0.76. This means that Kroger has the ability to pay off its obligation or debt lower than Walmart. The Kroger Company current ratio for the fiscal year that ended in January 2020 is 0.76, which is second higher after Walmart. Strength is something that an organization does well or in a way that differentiates itself from competitor. This of the advantage an organization has over other organization. This may be staff motivation, access to be specific materials, or a strong set of manufacturing process. Kroger is a very popular retail brand in USA, one of the largest in terms of value, has over 3,400 stores. Innovative service offered by Kroger such as financial service, in-store health clinic, Disney Magic Selection for kids, in-store consultant. Kroger is a fully integrated retail store with its own operation from manufacturing of food products to distribution, selling, and promotion. And next is Tesco. Tesco is increasingly diverse in terms of geography and fields such as retailing, books, clothing, electronic, furniture, petrol and software, financial service, telecommunication, and internet service. Tesco has nearly 6,500 stores worldwide in 14 countries. Tesco is one of the largest company of any company with a major listing on the London Stock Exchange. Here is strength of Walmart. Walmart has 11,500 stores in 28 countries. Walmart attracts consumers because the price offered is lower than its competitors. Over 2.2 million people are working with Walmart. Economy scale, so production costs are very low. Walmart is very developed supply chain and multiply supply of raw material from many vendors. Walmart has a wide range of stores and is therefore accessible to all types of individuals. Continue to weakness. Every organization has weaknesses or things that they do not do well or things that are not so good against it. Weaknesses are very noticeable if preventing from achieving a mission or making it more difficult. This may mean unnecessary financial leakage, improper targeting of customer, or poor service performance, among other things. Kroger weaknesses. Operating expenditure structure of Kroger is quite high. Kroger also limited geographic presence compared to leading global retailer. Here are the weaknesses of Tesco. The company faced controversies which create a few issues. Tesco has limited presence in emerging countries compared to few competitors. Walmart being the biggest retailer brand, Walmart comes under scrutiny for any mishap or policy. Walmart has controversy over its alleged strong arm tactic of trying to suppress the unionization or its America workforce. What is Porter 5 Force Analysis? Porter 5 Force Analysis is a strategic management tool to analyze industry and understand underlying of profitability in a given industry. The Kroger managers can use Porter 5 Force to understand how the 5 competitive forces influence profitabilities and develop strategies for improved Kroger competitive advantage and long-term profitability in grocery store industry. The threat of the new entry of new competitors in retail grocery industry is low. New entrants in grocery store brings innovation, new way of doing things, and put pressure on Kroger through lower pricing strategy, reducing costs, and providing new value proposition to the customer. Bargaining power of supplier of Kroger is low. A large number of companies in the grocery store industry buy their raw material from many suppliers. The suppliers in the dominant position can lower the margin that Kroger can earn in the market. Strong suppliers in the service sector use their consulting power to get higher price from firms on grocery store firms.
Love getting prices that are lower than low on food that's fresher than fresh? With the Kroger app, you can get personalized coupons on top of weekly sales and rewards like fuel points, all for prices that are lower than the everyday low. So go ahead, get lower than low. Kroger, fresh for everyone.
When a new product or service meet a similar customer's needs in different way, industry profitability suffer. The threat of a substitute product or service is high if it offers a value proposition that is uniquely different from present offering of the industry. If the competition between the players in this industry is price, then it will lower the price and lower the overall profitability of the industry. Kroger operates in a highly competitive grocery store industry. Internal analysis is the exploration of the efficiency, cost position, and competitiveness of an organization in the market. An important measure in external analysis is determining the level of strength and efficiency of the organization. Powerful organizations use updated technology, system, and equipment to complete their tasks. Its financial goals are achieved and strategic planning objectives are achieved. An organization with strong competencies also has a strong brand identity based on expertise, capabilities, and resources within the organization. Kroger VRIO analysis shows that Kroger financial resources are very potential and very valuable, which can help invest into emerging external opportunities. This can help Kroger in combating external threats. According to Kroger VRIO analysis, Kroger financial resources are scarce. Strong financial resources are owned only by a few companies in the industry. Kroger employees are a rare resources are identified by VRIO analysis of Kroger. Kroger financial resources are very difficult to replicate as identified by Kroger VRIO analysis. These resources have been accrued by the company through long-term profit over the year. Kroger financial resources are structured to obtain value as identified in Kroger's VRIO. From Kroger VRIO analysis, it can be identified that financial resource and distribution networks provide a sustainable competitive advantage. These patterns are a source of unused competitive advantage. The employees are temporary competition advantage. From the VRIO analysis, it can be concluded that the Walmart is sustained advantage, while Kroger and Tesco are the temporary advantage. Walmart is the first rank based on the VRIO analysis above, while Kroger and Tesco are in the second rank. Kroger has been a major leader and innovator over the years. The development of the grocery store industry. The company originally focused on basic food retail operations, include dairy, bakery, and baker shop. Kroger quickly realized that it was more profitable to operate common equipment in the grocery market under one roof. Superior product quality is very important in building customer loyalty and store image. Exceptional personal label products have gained industry-leading market share. Kroger owns and operates a private manufacturing plant that produces high-quality goods. Kroger gains a competitive advantage by providing a wide and unique selection of products. Kroger also differentiates itself by creating a superior range of products. Kroger uses superior customer service strategies to create a competitive advantage. The customers' feeling when they leave the store decide whether they will keep coming back or not. Innovation can be said to have always been something superior by Kroger. So I will ending this presentation with a big thanks to Prof and also my friends.